We have covered a lot of ground in these videos, and in conjunction with the book and the information that's contained on these videos and in the book, we would have gained, if we had followed all this, a lot of information about saving and investing. What is a stock, what is a bond, what's a mutual fund, what's a hedge fund, compounding, impact of time, stock market volatility, diversification, dollar cost averaging, so forth, many things that are very crucial to saving and investing. Now, when it comes to saving and investing and actually setting it up, with that knowledge, we can actually do a lot, and we can apply this knowledge to traveling very far down the road to making better investment decisions. It's up to us to continue to educate ourselves and to grow this knowledge and to implement, and ultimately to implement it. But the reality is we can do a lot by learning about it and by putting and informing ourselves further, and then by implementing it ourselves. We can eliminate high interest rate debt, we can start saving through regular automated investments, we can use index funds, passive investments, we can make use of tax savings that the governments make available to us, and we can diversify our investments and so on. And this is always going to be a process of learning. Keeping a long-term focus in this area is crucial for two reasons. One, that's where we end up. You know, the long term is where we want to end up positively. The short term is important on a day-to-day basis, but really we're looking to save for the long term, and the reality is, by definition, you know, the long term is where we're going to end up. So when we undertake our journey on regards to saving and investing, we really need to keep that long-term focus and bear in mind the fundamental principles that have withstood the test of time, as opposed to trying to seek out short-term measures that hold the promise of empty riches that won't materialize, and we have significant risks of losing our money. But fundamentally valid concepts such as the interaction between providers and users of capital via debt and equity, fundamental concepts such as that the value of companies has risen over the long term, over longer periods of time consistently because of ideas and innovation and hard work and sweat. These concepts are valid and have withstood the test of time, and there's every indication that these concepts will continue to withstand the test of time, although on a shorter term basis the movements of volatile assets are much more difficult to predict. In order to implement our system, you know, we're going to have a bit of courage and a positive outlook, and also a bit of discipline. And with investing, arguably in the short term also comes some uncertainty, but the uncertainty is mitigated by our knowledge. And if we can develop our knowledge and understand the investments, the reality is we all need to save and invest. And the other reality is that if we have some knowledge with regards to saving and investing, we'll be able to reduce our uncertainty greatly and be able to get on the road to saving and investing in a much less stressful environment. And lastly, we always need to be prepared to continue to learn and to learn from others. You know, there's no monopoly on good ideas when it comes to saving and investing. But the important thing is to understand those ideas within the context of a framework of understanding what debt, equity, real estate, commodities, what these investments are, and then to be able to analyze them, and not to approach this whole subject with no knowledge of the fundamental rules of finance, and then to be at the mercy of whoever is proclaiming to have the next great idea. If we want to change our circumstances with regards to saving and investing, we obviously have to take some steps to change ourselves, and changing ourselves is a good place to start. The same things, if we do the same things consistently that we've been doing in the past, we're likely to have the same result. And the same is true with saving and investing. So we need to take a few steps, arguably, if we want to improve our situation. And I think financial literacy and financial knowledge as far as saving and investing goes are keys to getting on that road. There is a role for investment advisors, and their great ideas can be gotten from investment advisors. But in order to have an intelligent conversation with a broker or an investment advisor, having some knowledge is of tremendous benefit. First of all, it increases the level of trust because we're much more able to assess what they're saying. Secondly, we're much more likely to act on what they're saying because we actually can understand what it is that we're doing, and we're not going to have the same, we're not going to be held back by a mystifying subject that we have no affinity to and which really scares the hell out of us. So I think there is a role for outside investment advisors, but the role is to be able to bounce ideas off one another, to be able to pick up new things and to share ideas, but also to ultimately follow to some extent have some knowledge ourselves and to be able to put that into the equation as well. The reality is nobody will care about our money in the same way that we do, and most outside investment advisors and most financial products that we buy, the compensation to the product provider is provided based on the transaction that takes place. And there's nothing wrong with that. But the reality is that we care about what happens over the long term, what happens in 10, 20, 30 years. And we're the only one that's going to benefit if things go well in 30 years. By then the product provider will have been paid and is potentially long gone. So there is a slight dichotomy in how the compensation works in many cases, and we need to be aware of that, and we need to have the knowledge to be able to put ourselves into that equation so that our interests, which are the long-term savings, are properly reflected in that. And the best way of doing that is through financial knowledge and saving. And lastly, I just want to say that I know many of us enjoy shopping, and we all enjoy shopping. We all enjoy buying nice things, but buying securities, buying a mutual fund, buying a mutual fund through dollar cost averaging can be very satisfying as well. And instead of watching, in the worst case, credit card debt accumulate, we can watch an investment grow and provide satisfaction to us in a manner that is much more long-lasting and much more productive than the short-term buzz we might get from buying another piece of clothing or another consumable item. So in many cases, saving and investing can actually be fun, and many people think of shopping for investments as shopping, and it's their most satisfying and certainly lucrative form of shopping that they do. Ultimately, the journey of saving and investing should be rewarding and fun in and of itself. It's an opportunity to employ discipline, to learn about something that's talked about every day all around us and that forms the basis of our entire Western civilization. And so the journey should be fun as well, although if done properly, the ultimate result of financial freedom and financial success will arrive as well.